NIO stock is on an absolute tear today, up over 22% in the course of one trading day alone. This is unbelievable for the company, their market cap, and obviously investors. But why did this surge take place? Is the short-term growth sustainable? Should you take profits and sell, buy more shares, or hold for the long term during this crazy market volatility? We are going to be answering all of these questions and then some throughout the course of this video, so buckle up. If you haven't already, hit that subscribe button. I'd really appreciate it. I do a ton of videos like this covering all EV stocks, tech stocks, IPOs, anything and everything personal finance to keep you ahead of the curve. While you're down there clicking things, absolutely decimate that like button. I would really appreciate it. Helps out with the channel so much, helps spread the video to more investors, which is good news for us. All right, so NIO is now sitting at $26.50, up from its previous close of $21.62. This is an absolute massive one-day jump and almost feels like a penny stock surge. It's wild when these large cap companies are able to move this much. However, catalysts in any sort of hype industry, hype stock, EV stocks tend to have this sort of effect. So getting into the news that catalyzed this event, a JP Morgan analyst by the name of Nick Lay set a new price target of $40 per share by June 2021. This ended up surging the price past a well-known buy point of $22.69, which ended up rocketing the share price today. Nick Lay is primarily citing value to sales metrics, of which I talked to in depth in my September and third quarter 2020 delivery update video, which brings me to my next point. If we go back to when Li Bin, NIO's CEO and founder, did an interview with Bloomberg Business, he was claiming that NIO's vehicle margins would only increase quarter to quarter, resulting in better gross margins in the coming years. It was this fact and this news that I needed to hear personally to prove that NIO was improving on a rapid and accelerating base. So this news that's lagging behind, only coming out now, was inevitable and crystal clear to me a few weeks ago. It was for this reason that I scooped up a ton more shares, as I knew that this, in conjunction with their great September and third quarter delivery update report, was phenomenal news. However, the market actually ended up reacting quite poorly due to other simultaneous events taking place, resulting in a NIO kind of stagnating, dropping surge price. This, I'll be honest, this surprised me quite a bit. However, the EV market we know is so volatile, so unpredictable, and doesn't always correlate with rational thinking. While I thought that the September and third quarter delivery update itself was going to be the trigger, I was indeed wrong, as it was instead the analyst's report to this September and Q3 delivery reports that ended up being the trigger. I guess people just listen to other people and analysts more than just analyzing the numbers and figures for themselves. But who knows? Going back to the analyst's report, JP Morgan expects NIO to gain 7% of the market by 2025. This would be extremely impressive. They also cite that NIO will be able to take 30% of the premium electric vehicle market. This is a space that Tesla currently dominates in mainland China. With a surging economy, with a surging market recovery, with a surging auto sector within China, with a surging EV market, this is going to be a massive market with tons of room to gobble up. JP Morgan sees 4 catalysts which may be able to bring the share price to 40 within just under 1 year's time. 1. The upcoming third quarter's earnings, which will be released in mid-November. Now, although I do see this making an impact on NIO's share price, past earnings would show that these are typically more subdued than one would think for releasing such good figures. What is odd about the share price is just like what we saw today. The investor impact on the share price typically lags these good reports by a few weeks until some analysts seemingly get around to publishing their analysis on the company. This is why it's so crucial to beat the masses to these reports and get in before the masses do. 2. The potential expansion of gross profit margin to 12%. Now, this would be absolutely phenomenal for the company, their bottom line, and current and future business operations. I do think this is more than feasible, as NIO is already sitting on a 10% on their vehicle margin sales and have been increasing this number every single quarter, and Li Bin has cited that he thinks he can improve this vehicle margin every single quarter moving forward. I would not be surprised to see NIO even above this 12% range. 3. A strong backlog of orders. This is something I've talked about in great detail in previous videos. In that same Bloomberg interview, Li Bin talks about how he acknowledged that the amount of deliveries in the month of July, August, and September would have been even higher if the company had not run into supply chain issues. Because NIO is currently outsourcing almost its entire operation, at the beginning of the year during the height of the health situation, management and NIO set estimates for delivery much lower than what came to fruition. NIO management did this because, like I said, the health situation was ramping up and they did not expect to see these huge numbers of deliveries in the later half of the year. They weren't expecting a massive economic bounce back and for the auto market to boom within mainland China. Because of this, JAC Motors, where NIO manufactures its vehicles, was essentially just playing catch up throughout the course of the entire year. Bin has stated that he thinks they will be able to overcome the supply strain in the coming months and quarters, which would result in increased deliveries, good revenue growth, and a better bottom line, which would most likely translate to happy investors and an increased stock price. 4. NIO Day. This is a major NIO event which is set to take place later on this year in December. NIO is setting the stage to unveil its first sedan, which was founded in 2014. This is expected to do massive things for this company, and as their company only really has larger vehicles at this point, the EC6, a coupe SUV, and the ES6 and ES8, just SUVs, a sedan will really widen their market. This vehicle would likely be cheaper than their pre-existing cars, even further increasing their market share. So am I currently buying at this valuation? The short answer is no. Right now, I'm gonna hold and kind of see what happens. Typically, when we see these huge surge in valuations within NIO, we see a quite sharp sell-off in the coming days, if not weeks. It's for this reason I'm going to look for a dip day, hopefully back around to the $22 point. If we can reach that level, I will buy back in. However, if it kind of stagnates here for the next couple weeks, I will be buying additional shares at this share price. As I am an early investor, my average share price is quite low. I'm not risking losing money ever on this company. I do love them for the long term. I only see them making good management decisions. They have a great bottom line. They clearly have a business operation that's working. The auto sector is recovering in mainland China. They are looking to expand into Europe and to North America in the coming years. There really are endless good things to say about this company right now, in my own personal opinion. That is why I am such a strong NIO bull. I'm not going anywhere for the long term. I'm gonna be buying more shares, hopefully on a dip day within the next couple weeks. Like I said, if the share price can get down to about the $22 buy point, I will be thrilled. However, if it doesn't and it kind of stagnates here for the next couple weeks, I'll be buying more either way. Even if we are only able to hit 40 by June 2021, a figure I think could be on the very low end, that is still an over 30% increase year to date. In any other universe, that would be a phenomenal year in and of itself. However, I do think that we could see a share price much higher than this $40 price point, as by analyst JP Morgan, Nick Lay. Anyways, everyone, thanks so much for watching. I really do appreciate it. What a day for NIO investors. I've been here since it was rolling around in the dirt. To see it really come into its adolescence is so nice. I think it can go much higher than this. Thanks so much for watching. Hit that subscribe button if you haven't already. I keep a very close eye on EV stocks, a very close eye on NIO specifically. Consider subscribing to my channel for more updates, weekly videos on everything personal finance to keep you ahead of the curve. I would really appreciate it. Smash that like button while you're down there. Thanks so much for watching, everyone. I'll see you next time. Cheers.